Perfect. All right, you guys, so let's go ahead and get started. I wanted to talk a little bit about what's currently happening within the market and also how I see most people reacting to it within the Discord, especially people who have been doing great. Some people have been doing great, having basically the most profit they've had ever. And some people are kind of straying away from what they were used to doing. So, one of the things that I noticed mainly is that, well, specifically in the frustration chat, a lot of us had a lot of trouble getting into the trades recently, even though some of the, like this includes myself, but a lot of us had a lot of trouble with getting into a trade that was basically clear, and you end up FOMOing. Like if you were looking at something like this, you see that the trend is clearly going on the downside. You see this move down here. You think about it, and you're like, okay, I can get on this break. You see that it's going, you FOMO in right here, and then you realize, okay, I have this one. This candle comes down. I'm barely into profit, but I want to get more. It dips back up, or it makes a move back up, and you think it's just going to start reversing, and you get out, and then it does that. Like I saw that with a lot of people. I even got one message from somebody who will remain anonymous, but they were explaining how they got in at a certain point, it would flip and then continue on, basically making their contract worth 200, 300%, and they got out for a loss. So with stuff like that, we gotta make sure that, psychologically you're prepared to actually trade, especially on days like this where, you know, everybody, including myself, this would have been a 200, 300 percentage day with whatever amount you were trading with. If you were scalping, obviously it's different. Like if you're going to scalp these tops to the bottom, that's at least 70%. But if you were going to day trade this is easy. Like the lowest you can get is 500%. There's no doubt about that. So anyways, specifically when you're looking at the market, like what we saw the past 2 days of market, okay? Thursday came in, we had a massive drop. After hours, we had a push up, and then again within trading hours, we had two massive drops. Okay, we had the first one, and then a bit of a kind of like a dip by opportunity in a way that also affected Amazon. Amazon was the one I was watching very, very consistently. I traded a little bit of Amazon. I traded Amazon twice. Surprisingly, I got in on Amazon right around here. I scalped it to the bottom. I said, cool, I was done. And then it came back up. I bought here, sold here, and I was done for the day. I had nothing else to do with Amazon. Then all of this happened. Obviously, you're hitting the floor. You know what I mean? So when it comes to you being able to psychologically stand these moves, you have to understand what are some of the main levels, and you have to understand what the tape is telling you at the same time. So if we make a move down, let's take a look at this first move down here. We're going to analyze Amazon right now. This was within, I'll go ahead and get rid of these. Okay. Within the first move of Amazon, the first thing we saw is a push up, which basically, I mean, even myself, I was expecting Amazon to finally come down, which it did on Thursday. And after a move down so drastic as it did here, pops up, comes down. Sellers were still there. Sellers were still sitting there. So you had a level down here and you had a level up here. Up here for calls, down here for puts. So go ahead and take a look at where these levels are. We never got near the call side. Sorry about that. We never got near the call side. This is where we were. This is a call side, pre-market high. We never got near it. Came down. As soon as we broke lows, we saw a big push down. Now, obviously, this is in the 5-minute chart, and holding a stock, especially in options within a Friday, is extremely. Oh, you can't see screen?
Yeah, no, your screen's not visible.
Oh, well, hold up. There we go.
Yep, it's back.
Okay, yeah, sorry about that, guys. I guess I had a little bit of a technical issue there. Anyways, let's see. You guys, yeah, but also hard SPY bounce. I'll talk about this in the end. Yep, can see screen, can see screen. All right, yeah, sorry about that, guys. Anyways, when it comes to days like this, and you set these pre-market levels right when you're watching it. So obviously above this area, we could see a nice push up in volume and then continuation of a movement on the upside and maybe stop around here where this previous breakout was right there. But of course, we came on the downside, and then as soon as we saw this breakout, we saw this move down. We made lows, came up, made lows again, came up, made lows again. So this is a pattern that has been continuous throughout any drop or any push up. If you see Amazon when it was pushing up, it specifically does this. It pulls up, and this is where people get caught. We have this area, it breaks, and you're like, psychologically, you're thinking to yourself, like, and this is something that I had for a long time. Like, I don't want to get in just at the break because it can be a fake out, and if it's a fake out, it's Friday. This is gonna completely tear the account up, you know. So you want to make sure that you wait when it's actually, I mean, when it's Friday, first of all, and also if you're working with a very small account. One of the main things I did when I was first starting out, which helped me a lot, is if I have a level, for example, this level right here, what I want to see at first is one, it closes below the level. This is kind of like a checklist for me. It closes below the level. Okay, so this is my level. It closed below the level, and then we see a second candle giving continuation to the current move. So it has to go below this area. So this is actually where I would start my scalp, and I would hold for at least 1 or 2 minutes. Okay, 1 or 2 minutes, assuming that, look up here, assuming that it's the second or third candle of the 5-minute chart of a 5-minute candle, sorry. The second or third candle of a 5-minute candle. This is what I mean by that, okay? So we're looking at the 1-minute chart, okay? This is exactly 6:47, okay? So it's 6:47. Guys, please mute Ayla and Tony. Okay, do you have to wait for the retest for level in short then? So that's actually, you don't necessarily have to wait for a level to be retested because sometimes, I mean, in this case, it did happen, right? You have this level right here. We break the level, we retrace towards this level, and then we make a lower low. But the thing about that is that sometimes we don't retrace exactly to the same level, especially if the drop is high enough. So if we have a drop, okay, let's say we have a drop longer than what this is currently. If we have this drop, we won't necessarily retrace to this point before we move down. If we have a drop from right here, expect a drop, I mean, a retracement towards the towards the breakout level, but don't expect such a high move on the upside, because if you do, what happens is that it won't necessarily, I mean, this could basically initiate a reversal pattern. In this case, it didn't. Why? Because we have multiple wicks up here that are telling us sellers are stepping in, sellers are stepping in, sellers are stepping in. This was for around almost 5 minutes until the last candle, which basically pushed it down. And then we broke this area, made lower lows. Then we have this area to worry about and this area to worry about. We see that it retraces again, not towards the same level, and then makes a lower low. Great scalp play. Why don't I have audio? Can't mute. Wait, Ayla. Yeah, Ayla, just go ahead and check out what's going on with your audio and let me know if you have any further problems. Okay. So is everybody kind of understanding what these moves basically mean?
I just want
We
to add
have,
one thing here.
yeah, go
So
ahead.
if you look, when you get an extended move down and then you get a break of a key level or an important point, what you normally see is either you'll get a fake out and it'll come back up, or you'll get a retest, not precisely the level like Emiliano said, but often you'll see it retest the level. So if I saw this, I would probably be in seeing this long tail candle below the level before it breaks, and I'd be out very quickly. Because in my mind, this is the type of trade where you take a 10% hit on a scalp or 15% the second it turns and spikes on you. So I would be out. And if you got in down here, you have to be planning to hold. You have to, like, it's unreasonable to expect this to go two more boys your way without retesting or without pulling back to a certain level. On the other hand, if you look like at the top of the chart where it rejects, forms like a double top and breaks, it's not extended yet. So you can get 3, 4 boys your direction without having to wait. So you have to have your expectations intact for this type of play, because or else what happens is I know tons of people who like, this is an A plus setup. I got shaken out as this candle popped back up. The tape was aggressively buying all that stuff. So you have to have your expectations intact and know what you're looking for. If not, you're gonna get shaken out on these over and over. I struggled with that for a while. So
Especially when it's a day like Friday. If it's a day like Friday, one of these candles, especially on Amazon, can take you out in 1 second. And I can tell you from experience. Yeah, a day like Friday is a 0 DT. I think everybody got that, but okay. Anyways, hopefully Ayla was able to fix her audio. What do you guys look for on tape for a clean breakdown or breakout? Well, I believe Jay explained that. You might have not been here, but okay. Especially on the tape side, when you're looking for, you'll do it later. Okay. Jay is gonna explain it later. Don't worry. Don't worry. Jay will explain anything to do with tape. Not gonna lie, he's much better than me at tape. But in terms of technicals, when I look for a move, I'm looking at slash ES and I'm looking at the stock of in question, which in this case is Amazon. The main thing that I'm looking for is one, okay, we have a direction. What is the tendency of the market? If we have a direction for the day, what is the current tendency of the market? As of right now, we're going downwards. The first thing I saw on Thursday was okay, like the first thing I was expecting within aftermarket hours and also within uh, Friday's hours was for the Fed to pick this up immediately. I mean, they've been hitting us aggressively, and I was not expecting another move down personally. This is why I was very hesitant to get into any put plays for holding them more than 30 minutes or anything like that, because I know that the Fed is sitting there ready to take over, and they did at the end of the day. I mean, you can see Amazon with its massive drop, and then all of a sudden, boom, it just spikes up again. So, with this in mind, I always just I'm always just trying to find scalps at this point because day trading just seems to be completely not out of the question. I wouldn't say out of the question, but especially on the put side, it seems rare. Yeah, for a scalp, how heavy do you guys go? When it comes to a scalp, it depends on the opportunity and it depends on the stock that I'm trading. If I'm trading a lower cap stock, I'll go with 1500 to 2K. But if I'm trading Amazon, I know that the moves are more than beneficial. I don't need more than 1K to actually benefit from Amazon, about $300 to $400 with that. It's based on your account and the way you see your account. What is your position size per trade? 10 or 20% of my account? My position size, well, I personally try to look for 20 to 30%. Um, but yeah, like 20 to 30% I think is a good return when you're scalping. For example, people with 5K accounts looking for aggressive growth would risk 5% of their account on each trade. I got 2 to 4K. Yeah. So how much do you go in on your own trade percentage wise? Again, I'm looking for no more than 30%. Uh, Day trading in this market, lol. Yeah. Why? So you go out the money on Amazon. Yes, out the money on Amazon. Especially since Amazon's current contracts are worth like $5,000, like $6,000. That's Yeah, I'm not gonna spend 6 grand on one contract. That seems just a little bit too much. Like 10% is literally $600 loss. For me personally, I don't feel comfortable in this market for day trading. My personality falls more towards two scalps. Yeah, I mean, something that's very important is that you have to find what is your current, personality in trading. Obviously, you can, once you get the hang of one thing, you can go ahead and broaden your horizons and go ahead and try something new. But make sure that you don't stay, in a comfortable area because you can also, I mean, scalping and day trading are two different monsters. Scalping requires a lot of attention for you to be like 100% there. Day trading requires a lot of, critical thinking, especially understanding of the current tendencies and also the news. So it's all basically based on how you see what is going on around you and what opportunities are presented to you while you realize what is going on around you. So, yeah, it's all based on your risk. Just make sure it has high volume and high open interest. I mean, even something that I've noticed, Jay, even though you can have high open interest, like for example, I don't know if you guys have noticed this, but every single time you go into any option spread, if you go to the 50s or the zeros, which I mean like 3200, 3250, if you look at the open interest, they will always be the highest. 3200 has 472, while all of these have like 78, 340, and then you go to 3250 has 382. All of these like are small patterns that people don't really notice, but if you're choosing out the money, this is going to be very important, especially when it comes to actually having volume inside of your contract. Like, look, 1400, and then the next one has 3250 is 1100. What is the minimum open interest and volume is better? Volume is always better because open interest means you have interest in opening a position uh, in that contract. Volume, it means you're basically in it. So you want to see. I personally look for volume since that means there are buyers and sellers of this current contract. But open interest is still something very, very important because that means there's people interested in that and people are still looking to buy or are still looking to sell. Yeah, if you go with whole numbers on any stock, you'll see more open interest and volume. Yep. You could also see which contract has high open interest and volume during pre-market as well. Gives you an idea. Well, don't be, I mean, yes, you can see that, but when it comes to options, you won't be updated on the current moves until the market is open. So you may have to switch your strike price depending on that. The more volume means the tighter spread, right? No, not necessarily. The spread is mainly, I mean, to my understanding, Jay, correct me if I'm wrong, but spread will be affected by implied volatility, and also it. What is this one that Usman was talking about? Um, there's this one little indicator that told you about it. I'll make sure to look that up. I completely forgot about it, but Usman actually shared it on his social media when it comes to spreads. So I think I'll go ahead and share that with you guys as soon as I find it.
Spread a lot of the time just comes down to volume and open interest do affect it, but when we're in markets with like crazy VIX and like really high volatility, that's what's affecting it the most. Like Amazon had like 6K volume on the day by like 1 o'clock, like 1 o'clock in the afternoon, but the spread was still like 4 points on some of the $20 contracts. So it was like 20 and 24. So a lot of the time it comes back down to the volatility because if a lot of people are trying to buy and they aggressively push the price and people aren't really selling, so the spread is huge. So that's just what happens on days like that. Plus, on days like that, market makers try to take advantage of spreads. So we'll naturally see much, much, much bigger spreads.
Right, yeah. Especially on the VIX side. I mean, the VIX is a very powerful tool. Um, but yeah, what is your suggestion to select good contracts for scalping and day trading? Well, when it comes to scalping, I want to make sure that it depends on the day that, if it's Friday, you want to make sure that you choose something that's not too far out the money or something that is at the money. That's probably the best idea to do, unless you're like expecting a move like this, which, not all Fridays this happens. So, but if you are expecting a move like this, you can go ahead and try something like a couple, I'd say no higher than 7, probably. Obviously, I would go with something that has a higher volume and take a look at your open interest. Make sure that people are also interested because people can be stuck. You can sometimes have high volume but very low open interest depending on how stuck people are. There's people who don't want to give up and they're like, yeah, I can turn around the last 5 minutes, which is not. So you want to make sure that people are still interested in that. But if it's Monday, for example, Monday, this is probably what we're going to see in Amazon in terms of contract values. Just go ahead and choose something that is number one within your tolerance of risk. Understand that if you go for the 3600, okay, if we click on this and we decide to go for one contract, no. So this is basically $3,415. Oh yeah, Tuesday, my bad. $3,415. 10% of that is $340 basically. So most likely you will be seeing 10% loss when you get in your position, and you have to be ready to see that, because if you go to 20, you go to 30, like that's where you get into the 900s, the 1K, and you have to be able to cut your losses there. This is all dependent again on your account size and how much you're willing to risk for your current goals. So in something like this, I'd go for like 3150. Well, since it's Monday, it won't really be affected too much. So you can choose whichever one it is on Monday, Tuesday. I don't think that that's more or less a problem. But once you approach, Wednesday, Thursday, Friday, you want to start getting closer into the money.
I
Do you
want
look?
to add one thing really quickly about the
Go ahead.
spread. So on days like Friday, where VIX and volatility is crazy high, spreads are huge, but there's also something else. If you get into Amazon, let's say you put in an order on the ask and you enter down 200, and then it goes your way really quickly. What happens is you can get filled on the ask for a huge profit compared to like normally it's really hard to get filled on the ask, especially if you're on Thinkorswim. But if you're like trading on Friday, I multiple times bought in, and 10 seconds later, the move went my way, and I could just place an order on the ask and be out for 400, 500 in seconds because people are buying all over the place. It's not like on a Monday or like a Tuesday on regular days where people aren't going to be buying on the ask aggressively. On Friday, everyone's trying to buy on the ask. So the key here is I'll talk about this more a little later once he's done, but you should be trying to sell where other people are trying to buy because that's when you get the best price. If you're selling when everyone's selling, you won't get filled. You're getting spiked out. So I'll explain that a little more later. But
Mm-hmm. Mm-hmm. Okay. JD is asking, do you look at the Greeks for day trading? Um, Personally, I mean, when it comes to the Greeks, I'm mainly interested in them once it's Friday, because that's where I know that, the Greeks are very much there. Like they will always be there. Delta and Theta, those are basically Theta is the only thing I worry about personally, because I know that Theta is the, basically the killer. And with the types of stocks that I trade, which is, basically high cap stocks, Apple, AMD, Boeing and all that, they, I mean, the delta will be there. Like I'm not trading some low cap stock where, the delta is not really going to be there, even if it makes a $1 move or $2 move. So in that sense, that should really just keep you in check when it comes to what assets you're trading and all that. But just take a look at your theta every now and then and see what I mean, how much would you be losing when it comes to a day trade? And if you're scalping, if it's a Friday, I would say no more than 3 minutes. How do we apply TTM squeeze when swinging? Yeah, Jay is probably the best guy to do that, and he'll go ahead and do that. That's a topic for another day. Yeah, perfect.
I wanted to add something about scalping, the time of holding. So I know scalpers vary. Some hold for a few minutes, some hold for seconds. What I've noticed is if you plot your levels correctly, you'll know when it's a strong mover, SPY selling off and is breaking support and it's extended on the longer time frame like Amazon where you can hold for 2, 3 minutes. And then there's days where the market's not directional, where you should be in before the pop and out 10, 15 seconds later. I'll show some of my fills later. But the bulk of my trades, even on Friday I should have held a little more. But the bulk of my trades are literally 15-second trades, 15, 20 seconds, and I'm still getting 10%. So the key is understanding how long you need to hold. Don't hold excessively because if something, ask yourself, would you enter this right now? If you wouldn't, if it's already three boys down, you should be looking to get out. So, yeah.
Perfect. Well, I think in terms of psychology, um, again, going back to understanding where you're getting in, like knowing where you're getting in and also following your plan to where you're getting out. I mean, personally, I followed my plan on Amazon. And was I mad about the fact that I could have I could have gone out with like 4K or 5K? It's it's part of the game. And if you follow your plan, you follow, a certain set of rules that you put for yourself that nobody else put for you. You put for yourself. I think psychologically you should be happy with that, especially since you came out green and your plan worked. And this is something that you can utilize for, further plays on days like this or on chop days where you can decide to trade or not to trade. So it's just all about your perspective on how you want to be trading, what you're comfortable trading in, and how much you're comfortable trading with. Uh, yeah, no problem, JD. When day trading options, I usually get frustrated when the trade turns to red and scale out of the position, but when I see it later, the option I've chosen would be trading at $1 above. How do I overcome this? Okay, so this is something that's very common. Especially if you get into like a breakout like this, like let's say you got in here because of FOMO, you're like, I don't want to miss this move, and then all of a sudden you're stuck here for the next 4 minutes, without knowing. Like most people were like think, oh my God, like it's starting to turn around, and I just got in. Like I don't know about you guys, but personally, I've had moments where I'm like, the market is just waiting for me to get in, so it just turns around, right? So you see the spike up and your trade turns red. The first thing you start thinking about is, okay, where are my levels? That's the most important thing right there. Where are my levels? So in this case, let's say we did get in at the bottom of this candle. We had this level right here set pre-market. Number one, are we closing above this level? That's the first thing you want to keep in mind. You want to keep that in check. Are we closing above this level? Because it can be a retracement. When you're experiencing something like this, it can be a retracement because it looks like this. It's a pennant. Okay? So what does a pennant do? We have a drastic move on the downside. We have buyers pick this move up and sellers start to pick it up once again. It's a healthy move for a continuation. But, okay, what you want to understand is that number one, are we closing above the level that we are retracing to? We didn't close and we tried once. We didn't close, we tried twice. We didn't close, we tried 3 and 4 times, okay? So that's one check. We have one check, okay? Take a look at the volume. We have rising volume, okay? Again, we are on the 1-minute chart. We have rising volume on the way down. What happened to the volume on the way up? Boom. Do you guys see that volume right there? And then as soon as we have some big sellers over here, take a look at the volume bar right here. We know that they wanted to pick it back up. But then what started happening? We started to pick up some volume. So as soon as we picked up the volume, this happens. And your trade went green. Okay? So when it comes to that, this is what you want to think about. You have number one, if you're caught in a retracement, are we closing above the level? We're not? Cool. That's one check. Number two, when we have high volume, what direction is the stock taking? Let's say we're going on puts. We're using the same example. We have puts. Is Amazon coming up with volume or with no volume? It has decreasing volume. Check. Okay, cool. That's one. Now, when volume increases, which direction are we taking on again? Oh, we're taking back the original direction, which is on the downside. Cool, that's one check. Final check. What is SPY doing at this moment? Or slash yes. Let's take a look. This is exactly. So 648. Okay, let's get a 6-4. So you can see that SPY slash yes was consolidating before making a move down. And this is what we were doing. So we had multiple moves to try to go up. And we couldn't even get above this level. We couldn't get above this level right here to even touch the EMA ones. And then we broke out. As soon as we break out, this is 653, 653. So take a look at that. That's pretty interesting. We didn't even break out. This is 652. This is a candle represented at 652. And this is what we were seeing, a massive candle of sellers. So again, don't correlate. Don't think that these are mirrors. Use them as guides. Slash ES and SPY are not mirrors of whichever stock you're trading. They're guides, okay? Because a lot of people think I follow, the same mirror image. No, I'm seeing the way Amazon reacts to the moves on /ES. I'm looking at the volume, and I'm also checking to see where are my levels and are they closing above these levels. So we have those 4 checks. Psychologically, you should be able to tell yourself, okay, if you were to get out, you already saw there was some massive rejection around here. We're not closing above this level. If you were to get out, it would be right here. This is your stop loss right here. The top of this retracement is your 100% stop loss, because once we start to turn around, that's a pattern that moves like this. We have a move up, we come down, and then we break out. That's a very common pattern, especially when the Fed picks it up. So make sure that if you're seeing something like this and you're staying with it, okay, you're staying through this move. If it starts to raise back up and it starts to break out of the top it just created, start thinking about you taking your loss out and making sure that you don't go over it. Okay, I have a lot of messages. Sorry, I didn't. Whenever I scalp, I usually have my 1 minute and 5 minute charts open. I realize the majority of the time I don't look at the 5 minute chart out of curiosity. What do you use it for when you're in a position? For the most part, I'm green, but it's always good to secure the bag. I don't know if you noticed, but I have 2 charts of the same stock. I always have 1 chart on the 5 minute chart when I'm day trading. When I'm scalping. So specifically, what I use the 5 minute chart for is to see retracements on the 5 minute chart, because the 5 minute chart can also give you retracement values. We have retracements on the 1 minute chart, which is a small retracement like this, and we have retracements on the 5 minute chart, which is something like this. Okay, we have a move down, continuation, then another retracement. Again, but these days were very, very intense. Okay, so if you're gonna use a 5 minute chart, make sure that you understand the levels and you're seeing, okay, are we kind of overextended at this point? If we are, you want to see where are we getting rejected on the 5 minute chart, because that can give you an opportunity to see, oh, sorry about that, to see where the next possible levels can be. You see, these are the levels before it broke. And then again, we have here and here. So this is basically what I use the 5 minute chart for. Further, more levels for scalping and all that. That's very important. Okay. Yes, I can see it, but there's not a lot of volume on buyers. How do you guys know how do you know, sorry, how do you guys know what would be the percentage of rewards for the money that you're risking? There is a way to calculate that. It's not that there's a way to calculate that. Of course there is, when it comes to if you were to like literally take the delta, the gamma, and add it up on the percentage values and also how much you're expecting the move to be, then yeah, you can calculate that technically, but the trade would be over before you calculate it. It's not that you have a percentage goal for the day, which is cool, but make sure that you don't you don't want to like stick it in your mind like, I have to make this much percentage with this position, if not I'm not getting out. Like, that's something that will tear you apart, because it tore me apart. That's something that at first was terrible to do. Like, you don't want to asphyxiate yourself to say, okay, I can only get out if I have this much profit, or this much profit in percentage wise. Like, make sure that you understand the move that's happening, and if you see continuation, cool, hold. You have no problem. If you're scalping, make sure that if you say I'm going to scalp, you scalp. If you say I'm gonna day trade, I'm gonna day trade. Okay. How many of you know the basics of the tape? I'm trying to decide if I should do a tape example today.
Leona, ignore the rest of the conversation. It's just me getting tape examples
Yeah,
that people
yeah.
want me to go over. So,
Okay, okay. Well, I think it's time for Jay to take over, you guys. 5 minutes, especially on Amazon, might kill your premiums on a Friday. Oh yeah. When you're in a trade, and I saw you don't have many levels pre-drawn on your chart. Do you draw them in advance? Do you? I deleted them. Yeah, I had a ton of levels. I deleted them
um,
so the chart would look a lot cleaner.
I just
Yeah.
want to add that one thing about Amazon killing your premiums. It's actually not just Amazon, it's everything. I took a $400 loss on AMD contracts. I didn't think it was possible to take such a big loss on AMD contracts, but anything when you buy after the spike and it spikes against you, you take that type of loss. It's not just Amazon. You just see it in Amazon because it moves faster.
Yeah.
So
Also,
it's a common
especially if
thing.
the VIX starts spiking, um, like if you're on a put side and the VIX starts spiking downwards, your contracts are gonna be almost worthless, depending on the day. Like if it's Monday, you will take a hit. If it's Friday, expect a 40% loss. Like this is no joke. VIX will determine a lot of your contract prices and also implied volatility. Like that's something you guys want to be watching. Again, VIX goes against /ES, but not all the time, specifically at this point where it's interesting that the VIX was around the 20s at more than all-time highs when the last time we were in all-time highs, VIX was trading around 13 or 14. That's a big red flag. And especially with where we are on the VIX right now, we're in the 30s, that's massive. Like you want to make sure that you're looking at the VIX when you're trading. At least I think that that's something very important. But anyways, yeah, the VIX, VIX, yeah. Anyways, let's go ahead and let Jay take over from here. He has some tape examples he wants to share. And yeah, Jay, I'm gonna make you host. Okay.
Yep, perfect. Let me shut my door. Give me a second. Okay, can you guys hear me? Let me share my screen. Okay, wait, he still has to. Okay, now it should let me.
And no problem, you guys.
Okay, so can you guys see my screen with no problem? Does someone tell me, Emiliano?
Perfect. Yep, I see your
Okay,
screen perfectly.
perfect. Okay. So first, since we have a lot of people that I guess are a little bit newer to scalping, I'm just going to quickly show my layout of how I scalp. I struggled for a while to find something that works quickly. So this is what I use now, which I basically keep open 3 charts with, this is how important time and sales are to me. And level 2, I just have them right next to the stock. And below that, I have active traders linked to 3 different numbers. So if I want to make a trade, I just go here, I type in whichever stock I'm looking for. So for example, if I'm looking for Amazon contracts, I'll go here and I'll just send the contract to whatever number goes accordingly. And then I can trade it right here automatically. My quantities here. I also keep flattens open because that just gets you out of whatever position you're in as quick as possible, which I rarely use, but in emergencies, for example, something starts selling off, we're in a SPY dump and it pops up, it's useful. So this is the setup I use. If anyone wants help finding a setup they like or anything, let me know. I can help with that. It's actually really important, especially if you're scalping. So now before I get to the tape, I'm going to go over one other thing. Let's go over here. Okay. So we're going to take Amazon, since that's what we were talking about for most of today. Now I'm going to fully clear my chart, and we're going to set levels and plan. I know most of you know how to set levels, so we're going to focus mainly on the planning part. So let's maximize this. Levels, okay. So first what I do is, some people say start from the bottom. I just start from whichever price points look relevant. So it's not going to reach 2000 or something. So I'll keep mine to the relevant points. So it takes me about a minute to do this in the morning. I normally reset my levels in the morning. Some people keep theirs. I prefer resetting it so I have a fresh mindset for what I'm looking for. So these are my major levels that I put in pink or whatever color. So then I'll put a little more minor levels over here. Oh wait, I did not mean to change that one. Okay. Okay. So I'll put my more minor levels over here. This is all off the 4 hour. The lowest time frame I'll set levels on is the 1 hour for day trading. For scalping, I'll go down to the 15-minute, but on day trading, I stick to the 1 hour price point. So let's see. Okay. So seeing this now, we get a general context of what we're looking for in terms of a day trade. So for me, my first entry that I was looking for on Thursday, which is when the sell-off happened, was I was looking for a long above all-time highs up here or a short below this price point. What most people's mistake is in day trading is their plan is short under the level, long above the level. But this took me a while to figure out in talking to a lot of traders. If you ask them, oh, do you short the level? Do you buy after the breakout? They say it depends. The guys that are mostly consistent. And the reason why is you have to be able to customize your plan more. So let's take here. We have a SPY sell-off the previous day, and now we have Amazon ran down, and now it's holding the lows. There's no recovery after hours. So let's go down to the 5-minute time frame now. So we get this clear downtrend, and we have a break below the low. The problem that some traders make is they see this break below the low in this area, and now they go that there's no trade. The breakout already happens. The thing is you have to understand the context. So now what I see a strong downtrend. I see support breaking. So what I'm looking for is a short opportunity on the 5-minute. That will make a good time frame, good trade before the stock is extended. So I'm going to do, these are my intraday levels. These are the levels I set and plan with before I take trades. So now what I see is I see the previous day's low of day, pre-market support all lining up. Why is it doing that? So what I know is now my best short opportunity is here. My first target is here, and I'll re-enter down below here. So this is something that it seems simple, but it's something that people struggle with for a long time. Your trades don't have to be solely the key levels if you're a day trader. For example, here you get your first breakout. Let's say that you take this trade. You think it looks good. You take it short, and you get faked out. You stop out. Some people won't trade this again. What I see is a perfect re-entry. You get volume, picks up short volume, and you get in short again here, and you hold till the next level. So that's my perspective on day trading. I'm going to go to the tape soon. This is my simple strategy. You don't set levels from the 3-year, 1 week, etc. So what I believe is that some people don't agree with this, so correct me if you guys don't think I'm right, but what I do is I think that the most relevant levels are the most recent levels unless you're going into like areas that haven't been touched recently. So for example, when coronavirus, the recovery was happening from the market, then I would go back months to set my levels because that price area hadn't been touched. But now we're in levels that have been touched multiple times. And if you honestly try to set levels all over the place, what happens is you get a messy chart. You don't know what's important and what's not. On this, I can clearly tell, here's my important levels, here's my major levels in pink, here's my minor levels in blue, and here's my intraday levels to take trades. So that's basically how I look at day trading setups. So another thing, let me go back to the 5-minute. So a lot of guys will also say that they're key level traders, but if you ask them what their favorite setup is, they'll say a triangle or they'll say a bull flag. So basically what that means is, let's take this, right? We have our resistance here. We should be looking to get long. Well, we see over the last 2 days, we get a triangle coming down, we get a triangle going up. And then this morning we gap up. And now what we want to see is we want to look for an entry. We get the idea that now this might make a good trade. We might rip the level. You don't have to wait for the level break. You have to understand context a lot. So what you see is you get a level break further up. But what happens here is we see that this is what I call a trigger. It's used in terms, thank you. So it's used in terms of trades a lot of the time. Basically, it means that you're looking for a certain price point to break for you to take the trade. It doesn't have to be the actual breakout, because for me, getting in up here is scary already because you're already extended 3 boys up. I'd rather be looking for an entry down here. On days like this, so now the next day, there's no trade for me here. Some people, you can say that there's all-time highs going in, but my big problem with this is these wicks. I wouldn't take this trade. The second day runs often are smaller moves. So in another webinar, I'll cover exit strategies, stop losses, all of that. But this is generally how I plan for the market for the next day. And if you're a scalper, I plan the identical way, because for scalping, you can't make a plan. I'll short the low day, I'll short the high day. You have to know where your key levels are. For example, I played, let's go to the 1 minute now on the scalping perspective. So this is Friday. So my first entry on Amazon was, I think I might have sent this in the group, but my first entry was here. I got out one more down. My next entry, I shorted again right here, got out at the low here. I didn't take this one again because it looked extended to me, but what happened is when I saw I was holding this level and I got this candle, I shorted one more time and got out at the low. All my entries are much like, for you guys, a lot of you like to wait for the candle to close, like to wait for confirmation. What I do is I am trying to be in before everyone else is in. So my short play here, most people aren't shorting yet. I short here the second I see SPY selling off. This is an intro. Normally, I would never take a play like this. I think I also wrote about this in the group. I normally would never take a play mid-range like this. But when SPY is selling off, you can take what I learned this from my experience trader, what's called market sentiment plays. Instead of taking A+ setups, low of day, high of day, key level, you take setups mid-range, watching how the market is moving, and you catch moves on Amazon, Tesla, Apple like that. My next trade is the second I saw this rejection, I took it short as this candle closed, and I covered down here. And I think I took a few more trades on this, yeah. So my big, wait, let me show you guys where my big loser is. I took a big loser on this. So my big loser was, I saw this short coming in, I got in right here, and I was expecting it to blow through low of day. What happens is it fails, so I stopped out here, and you guys won't believe the size of this loss. It was a $28 contract, so 2,800. The contract went from 2,800 here to 2,100 here. And I stopped out. It wasn't a smart stop out, but I still stopped out, and I re-entered down here and continued. So with scalping, what you have to understand is there's multiple entries over and over and over, and you have to be ready. You can't be saying, I'll only get in after the break. For example, if you get in down here, I guarantee you'll be down on Amazon at least 20% up here. You have to be in before most people are in. That's the idea that I struggle to understand for the longest time. Like I always ask people, why wouldn't you wait for a candle to close? For example, on this trade, I took Amazon long once up here, seeing it push pre-market highs, and the tape was aggressive. And I was out up here. If you waited for this candle to break the high, break the area, I guarantee you would have taken a 30% hit right over here. So I'm going to go to OnMint. Does anybody have any questions about that, about day trading, how I do day trading before I go onto the tape? Any questions? It took time. I struggled a lot at the beginning, so it takes time. Flatten. Okay, let me go back to my grid. So flatten is basically, let's say that let's say I'm in 5 contracts on Tesla, and I'm short at one point. So so what happens is, let's say that it suddenly spikes up. I see this spike up and I want to get out. I click flatten, it'll get me out of all contracts. It doesn't matter what number I have set. So for example, if I was in 4 contracts and I have 2 set in here to scale out, and suddenly I need to get out of all my positions, instead of having to take the time to type in 4 again, and then click sell the bid or sell the ask or something, I just click flatten. It'll get me out on a market order. But you do take huge losses. Like, let me see if I can show you guys one. Okay, I think 9-4. Yeah. Okay. So we'll go to let's see. We'll go to AMD. So what happened here is I bought 10 contracts. I'll answer that question in a second. Yadi and Jennifer, I'll answer you guys' questions in a sec. So for example, AMD, I had 10 contracts at 299, and it was like ranging around that area, and suddenly it spiked up. So I just clicked flatten and I got out at 266, which was still a big loss. It was about a $400 loss. But within the next 10 seconds, the contracts became 210. So that type of loss that would have been a $900 loss in a matter of seconds. And also I was saying I'd show you guys how fast I'm in and out in general. Let me try to find one of my shorter trades. Here, this is a good one. So I bought Tesla at 9:32 in 32 seconds, and I sold less than 30 seconds later for That was 1254 to 1416. And actually, since I'm on my fills, I'll just show you guys something I do. If you notice that on the open, I'm literally taking $1,200 positions, and by midday, I'm taking $4,000 positions. By morning, I'm taking $4,000 positions. It's building a cushion. I learned it from someone else in our group actually, but it helps a lot. Because now I'm up 200, so I can up my risk, and then I'll take another contract now at $14 and make a profit on that. And then I size up. I start taking bigger size. So that's something anybody should do if you're having trouble staying green or you start the day red and you have to recover. You choose your targets based on levels. So for day trading, what I do is, what is the chart? So for day trading, I have to get rid of these arrows, but we'll look up. Okay. For day trading, what I do is if I short here, what I'm looking for, oh my God. What I'm looking for, if I short over here, if I short the low, what I'm looking for is the second I start seeing a bounce like this, I'll be out. My price target is based on levels for sure. But I'm not too stubborn in the point where I say it's $1 away from my target and now I see volume come in on the other side or option flows coming in on the other side. So let me exit. So I don't 100% wait for my target. Some people do, but I get out when I feel that the trade's not working. In terms of stop losses, I almost always wait till my stop gets hit unless I see something that clearly tells me your trade's failing, staying in this any longer is dumb. Which, like, for example, if you got long on Amazon on a recovery play over here for a day trade, the second you see SPY selling off, you should be out. Like, it doesn't matter if it hit your stop or not. There's no point in waiting till you reach minus 30%. So, you said key points considering pre and post market. So my key levels, no, I could draw my key levels without pre and post market at all, but my trigger lines or my trigger levels, which are smaller, minor levels or patterns, I do use pre and post market, which is basically the points you're looking for your entry and exit. My entry and exits are not always key levels. Sometimes they are. For example, this day, I don't want to have to wait till here to get short. I miss easy 100% from over here to down here. That's a 70, 80% move. So I'd rather just get short where I see the first size, like first possible entry. Same thing with that triangle pattern I showed you guys earlier. I'm not going to wait for the key level to break. I'd rather just take the trade when the pattern presents itself. Any other questions, or should I go on to the tape? So I also plan like this for every stock I trade over the weekend. I'll look at Benzinga Pro and like come up with the news and what's potential. And I'll do this for each stock. I also recently have started going and writing down stuff on paper and planning trades out. So here, we'll quickly just talk about a fake out. So over here, you get a fake out. This looks like a good short play. It looks like Amazon's going to short, but it's midday, first of all, which I think this would make a valid play. It's not a bad play if you got short. The key is you should just be out the second this candle closes like this. And from down here about to up here is probably 20%. So you will take small losses, but most of the time, if you're watching SPY, ADD, and VIX, I always keep them open to a certain level. You can avoid some of these plays as well as the tape. So now I got one tape example that I'm going to go over. Let's get to okay. So now let's go to on demand. I'm trying to find the date. Hopefully Friday's up. The 28th was this Friday, right? Yeah, I think so. Okay. Oh, okay. Since Friday's up, I have so many good ones I can use. Okay. So we'll start with Facebook. Okay, so we'll start at 9:43. Okay. So let's let this load for a second. Perfect. Okay. And now we'll do this. Actually, never mind. Okay, perfect. Okay. So let's see what we have here. So quickly, I'll just set the only relevant level at this point. We're obviously going short Friday. So pre-market low is down here. This is obviously a major level as you see this spike over here too. They both line up. So now we'll watch the tape. Let's hope the tape doesn't lag too badly. If not, it's going to be difficult. So the person who sent me this went short at 9:45. So we'll just watch the tape right now. Oh, wow. SPY actually loaded also. Okay, so first let's just look at SPY quickly. What you see is we have a rising channel. I'm looking for a continuation short, which is basically a solid break below 349. So we have aggressive buying on the left side. There's a couple of bigger numbers. There's some buying pressure down here. Let's see. So I don't really see sellers stacking yet, but I think sellers will stack. So let's see. So far I'm seeing nothing much. Let's see. Okay. Okay. Do you guys see this area? Can someone just tell me if they can see on the tape? Can someone just write in the chat? Yeah, okay. So let me see if Zoom's drawing tool works. Okay. So this is what I mean by seller stacking. Originally, we saw a little bit of buying pressure here, but basically what that's telling me is that 294.06, 294.07, we have selling pressure, which is just about this point. About around this point, what happens is we have aggressive selling pressure, which means there's a lot of people who are holding short or waiting to watch to, like, for example, if I was executing on this, I would be waiting to see this to be getting in. So this means two things to me. One, sellers are there. Two, a lot of more people, guys who are experienced, are now looking to get in. I didn't get to watch the original break at first, but I'm sure the tape speeds up, and on demand, you can't really see the tape speed up. So, okay, so now we'll continue this. If anyone has any questions, write it in the chat, or you can ask, I guess, if you can unmute your mic. I don't know. So, okay. So now you guys see we're repeatedly rejecting that point. Repeatedly, over and over, we're getting rejections on that point. Now we get a little bit of a push up to 294.06, 294.1. Let's see. The tape's moving relatively fast for Facebook. SPY's pushing up, so I'm not expecting it to break yet and hold with pressure. And also 294 is the whole number. I need to see it hold under 294 for a little bit. That's an important part of this. Again, if you see here, I just paused it here because even though this is popping up, what it's telling me is as it pops up, more and more people are looking to short. You don't see, if you watch carefully, you don't see huge sides over and over holding over here. But if you look again on the tape, at this point, what you see is aggressive sellers waiting to short around 294.5, which is over here. So basically what I'm saying is you could get short here. You probably would have gotten shaken out on this first move by this candle. But what happens is I'm still pretty sure that this is going to continue moving down. Where's my mouse? Okay. Let's clear this. Okay. So we're still getting a pop-up. This is where most people get shaken out. I even would have probably gotten shaken out here. But I would be looking for re-entry. If you don't look for re-entry, that's just not smart in general. You should definitely be looking for a re-entry. Yet again, more aggressive sellers. 10 and 5 on the ask sitting there. Again, if you watch over and over, this repeats. And if anyone sees Lord's size on the bid consistently holding, tell me. But if not, this is what I'm seeing. I'm still seeing Lord selling pressure over and over on this side. And if you watch this on not TD Ameritrade, if you watch this on something else, but TD Ameritrade, you'll notice that this is much clearer. You'll see orders also coming in below the bid. You can't see that yet. So now the tape's starting to move a little faster. We're getting some aggressive selling. Let's see. So now what we have is we have a lot of bids near 294. So now what we're watching for is a break of 294 to hold. This first move, you could have been careful. If you were smart, you would have watched 294. And the second it doesn't hold or you don't see aggressive selling below, you abort it. So now let's see the second time. Again, 6 on the bid. Let's see if it holds underneath 294. So we're still pushing down. Again, bid super thin, size on the ask all along. Sellers holding it down.
Jay, do you mind me adding to what you just did right there?
No, for sure.
Could you make the chart like it was before a little bit wider? Uh-huh, that's good. Yeah, right there.
Okay.
So you see that level between 295 and 294 point, yeah, right there. You see how it broke out right there. Look at the way we retrace to that same level, and we are fighting that level once more. If we were to go above that level and a close above and then a continuation candle to something like that, we could actually expect this to go towards 296 and then above if it continues on with volume. But we can see here that the way Facebook is reacting to SPY's current moves, you can see that. Oh, I can't use my cursor on yours. Just take a
Tell
look at
me
the
what you're
candle on
thinking.
SPY. You can see that that candle has bullish intent, yet Facebook is coming down, meaning that there are higher sellers. And as soon as that candle starts to turn around, we could actually see Facebook just begin to dump completely.
This
Because
is actually a
one,
golden example of relative weakness. Like as you were pointing out, what we see here is that you have a rising channel. SPY is slowly pushing up. Facebook's not pushing up. It's just consolidating. It's holding. You'll see this on Amazon a lot too. And
yeah,
QQQ is just chopping at this point. But what we see is VIX is picking up. VIX is really picking up at this point.
yep,
This is a bigger candle for VIX. So what I would expect is as the high of VIX breaks, we get a beautiful short below 294. And my confirmation to stay, whenever I take a trade, I'm always thinking, at what point am I comfortable with the trade? At what point am I saying, okay, this is a good trade, I can hold, I don't have to have my hand on the flatten button. For me, that point is when we get the break of 349 basically on SPY. We get the break of 349 on SPY, we get the break of 294 with good tape on this, and we have VIX picking up above high bit. That's the point where I'm comfortable, and I'll hold this probably till, as a scalp, if I want to hold this, I'd probably hold it down around 292-ish, but I'd probably be out by the next whole number, 293. So let's
yep,
play this. Emiliano, feel free to add anything. You don't have to ask. So,
yeah, no problem.
okay. So we're getting that push down yet again. Let's see. One quick thing, you can't really tell tape speed on TD for some reason, but if you watch DOS or anything else, you will literally see the tape triple in speed in seconds. Like you will see as 294 breaks. We'll see if it happens here, but on DOS or like on anything else, we'll literally see the tape quadruple in speed. It's insane. Like TD, you can't gauge speed that well. The only way I can tell speed is by how fast it blinks at me. But on DOS, you can literally see the tape move faster and faster and faster and faster. Okay, so we'll see. Just pushing back up. Still have sellers on the left. I'm not seeing weakening sellers. I'm also not seeing buying volume aggressively. SPY starting to push down. VIX is slowly picking up. SPY starts selling off. Now I would be short right now. I'd be short by now. This is where I'd be watching to be short. I'd be out if 294 fails. We get that rip. Let's see. No, I did not catch it. Okay, we'll keep playing this. So now what you see is, first of all, there's a lot of red printing on the tape compared to earlier. A lot of red printing on the tape. This is where I used to get shaken out, but now what I'm seeing is SPY selling off. QQQ is going straight to, and VIX broke. So now at this point, I'm just holding it. As long as I don't get a close above 294, I'll hold. If I get a close above 294, I'd be a little more worried, but I still would probably hold. So it still holds below the level here. We get to sell off. Let's see. The tape is speeding up a little bit on this. So 293.5 is posing as a little bit of support. And we're getting a pop back up. I would hold unless we get a solid close above 294 with volume, which I'm not seeing yet. Oops, did not mean to do that. Did I fast forward? How much did I fast forward? Shoot. This is what we were watching, right? We were over here. 948. Okay. I kind of messed it up. Okay, this is what we're watching. So basically, if you got in, I'll play this. If we got in as the break happened, even when it pops up, you would still be green. If you got in, I would see based on 293. Wait, oh, I missed that by like a second. Did anyone else see the 57? Did anyone else see the 57 on the tape? Can someone just write on the chat? Okay, let me try to go back and see if I can get that to show up again, because that's important. That's where you should be looking to get out. Okay. So let's see if we get a little bit of a push. This might be a fake out. I do not know what type of trade this is at this point, but I think that the tape is clean for the entry for sure. Now what we're watching for, should we stay in or should we bail at 293.5? Let's see if I can pause this again. So it's still holding below the level, and we still see SPY dump, but SPY pop back up a little bit. But all these candles are still bearish to me. There's nothing here that's telling me to get out. Let's see. The time in sales is frozen. I'm trying to see where the 57 came. I can't remember exactly where it came. So we're getting a push back down again towards 293. I would be out by now because it bounced off 293.5 like 4 times. We're getting a little bit of buying pressure around that 293.5 point. Hopefully the 57 shows up again. If not, it must have been earlier. 293.30 at 57. So basically what that's telling me is that even though it's down at 293.30, which is about here, yeah, it's exactly where the wicks are. What that's telling me is you should be out. I would have been out by 293.5 because I don't like how this is bouncing 3 times off 293.5. I probably would have cut this trade to break even. Something that confused me is orders on both sides change so much that at one point I have so many it changes to buy. On both sides change so much that at one point you have many orders on the sellers and it changes to buys. Yeah, so basically what you have to look for is you can't just like try mathematically to like see which side has more on the tape. What you have to see is repeatedly what's happening at a price point. For example, I know that in this area there's repeatedly sellers. That's what we saw with the 6, the 3, the 7 in this area. What you see is you get smaller prints, but you get 2s, 3s repeatedly coming up at the 294, 293.8 price point. And what that's telling me is there is buying pressure there. So now you have to put it into context. SPY is selling off. You get a SPY sell off. QQQ just dumped and it's continuing to dump, and VIX is picking up to the highs. So what that's telling you is there's some buyers here. If you get, this is something that I think people think that buyers on the bid means it's going to go up and sellers on the ask mean it's going to go down, but that's not what it means. Buyers on the bid on a bearish stock confirm that there is a level there and the break will lead to a better move. Asks, like a lot of sell pressure on a bearish stock tells you that it's likely to continue downwards on a down move. Vice versa, if you look at on a long stock, if there is no, for example, if you were trying to go long above high of day and there's no sellers, if the ask wasn't showing any sellers, that's automatically a bad trade. There has to be some sellers to confirm a level. So it's not more about calculating how many numbers are on both sides. It's more about understanding, okay, we have some buying pressure at this level. Now we have aggressive selling right above the level. As we break, we're going to see a little bit of a continuation down. This would have probably been a break even or small green scalp for me if I took this. So because on the level 2, those orders haven't been filled, so they can. That's fine. That's fine. It's okay. I'll go over the 931 again if we have time. So because on level 2, those orders haven't been filled, so they can scare you or take you out. So what happens is if you don't understand level 2, yes, it can 100% shake you out. If you see a little bit of buying pressure, if you see a few buyers on the side, and you suddenly just say, okay, I'm out, because I see a little bit of buyers, you can't do that. You have to understand the context. For example, a buyer of 57 sitting exactly where the wicks are, that's a sign be out. The second you see this, just be out. Be out. You can either, I would get out right above 293.89 again, or get out as it touches 293.5. But by the time you see two wicks like this, you already should be looking to get out by 293.5. Because this is at least, this pop down, if you've gone in right here, this pop down would have probably been at least like 5%. So it's a lot based on your execution. So stop loss, you wait for the candle to close above the level. No, never. I don't like the rule of waiting for the candle to close. It works in day trading, I think, a lot more. I use it when I day trade. But when I'm scalping, I'm always just watching the tape. For example, if I got in short on the 946 candle, which is this candle, I got in short as it pushes down, and we get this move, I should be up at least 5 to 10%. And then I see SPY pop back up, and I see VIX start to decrease a little bit. I know that we're going to get a retest, so I'll probably scale out of 3/4 of my position, and I'll hold a little bit. And I definitely would have been all out by here. It's just not worth holding this far into the range, even if you see the sell pressure on a scalp. The scalping is all about keeping your losers really small. For example, if we take like another stock, we'll watch Amazon after this, because I have good examples from Amazon, but you guys will see what I mean by a clean scalp, okay? So we should be looking for where the buyers and sellers are fighting, if you can. Yeah, so basically you look for, the level 2 does two things. Number one, it confirms that that area is relevant. You don't know if this 294 level is relevant until you see size on the bid and ask at that point. Then you use context, how the tape is moving. Are there a lot of orders coming in on the bid? Are there a lot of orders coming in on the ask? Is there size on the bid repeatedly? It's what's called bid stacking. Are you seeing 3 10s over here? Are you seeing repeated size over here? So that's what we're looking for. So it's all about context. It's not just I see buyers, so I'm out. I see sellers, so I'm in. It's not that simple. It is relatively simple, but not that simple. We'll watch a clip on Amazon. This is Friday, right? I think this is Friday. This does not look like Friday. Oh, this was last Friday. Funny. Okay, now we're on this Friday. Perfect. I was watching the fully wrong day. That is funny. Okay. So I think this break at, we'll watch from 9:45. So this time we know what we're looking for. Yeah, so what I do is, even when I'm not trading, if I have time, I will literally just watch the market. I literally just watch the tape. I used to, before my computer started crashing, I used to have 6 charts open with the level 2 in time and sales, and just watch 6 level 2 in time and sales at the same time, or like keep watching different ones as they approach relevant price points. So we'll watch for this 3,300 break and see. Tape reading is, once you understand, I can probably do this 2 or 3 more times for everybody, but at that point it's more of you have to go watch for it yourself. It's only helpful the first like 10 times that someone explains it. After that, it's more about you seeing. At the beginning, yeah, someone has to tell you what to look for, but once you know what to look for, you should be watching how to do this and doing it on your own. So we'll just watch the tape on this. This should be pretty interesting. So Amazon's tape is pretty interesting, just saying. Okay. So we're paused. Okay, play. Okay, I do not know why the candle's not moving, but it should move. Okay. Ah, there we go. Okay. Wait, I want to go back by like 20 seconds on this. Okay. Okay. So we see this push down. Let's see if we're getting anything on the tape. I just saw a 2 and a 5 on the side. We have aggressive buyers at 33.05. That's confirming that this is going to make a good short play below 3,300. So see, this is perfect for your question, Cheza. So you were saying that you see aggressive buyers, so this has become a bad trade. All this tells me is that when it pushes 33.05 and we get that pop, we're going to get a nice spike down. That's all this is telling me. Because someone's going to put in 1,000 shares on Amazon and hit the bid, and then the price is going to break. So what I'm now looking for is a break, and I'm looking for a break and hold below 33.05-ish, and I'd be careful till it breaks 3,300. Let's watch this. And you see how volume picks up, SPY is dumping. So now we're getting a little pop-up. Let's see if we can see the sellers. We should definitely see sellers coming in soon. So we still have that big size on the bid. At that point, we have a little more size on the bid. I'm not seeing sellers come in, but I can literally see the sellers through the wick, but I'm not seeing them on the level 2 yet. There was a 4 that just popped up on the ask really quickly. Okay, I couldn't pause it, whatever. Okay, so just watch the ask carefully, see if something pops up. And in real time, this is much harder. TD literally slows down your time in sales because it's just bad in general. But in real time, this is even harder than it looks right now. Okay, again, we're seeing size at this 33.05 point. So you can really buy at the bid instead of the ask. No, so you have to explain your question. I don't get the question, Yeti. And hey, just one last question. You can answer it then. But what are some things? I'll answer that one at the end. Yeah. Can you explain your question a little more to Yeti? I don't get the question 100%. So you can really buy at the bid instead of the ask. No, I'm looking short at this point. I'm not looking to play this long at all. I'm looking to play this short because SPY is dumping. We're going to get a break below the low again. VIX is just straight up just running up. So I'm looking for this 33.05, 3300 break. So if you can explain your question again, I'll try answering it. That helps. Let's keep watching this. So I still don't see much size on the ask. So a few twos, but I'm not seeing anything big on the ask. It's pushing down. Okay, again, we see huge size on the bid. This is just confirming to me. It tells me two things. To take this trade short, yeah, the price action is really good on this trade. First of all, this candle makes I would be in without even the tape at this point because of this candle, but the tape just holds me in the trade. But what this is telling me at this point is 33.05 is a solid support level, and what this tells me is SPY is on a clean downtrend, VIX is on a clean uptrend, ADD, QQQ won't load, but I think this is QQQ. Okay, so QQQ is straight selling off also. What we're just looking for now is a break here. This is the type of trade where I'll just click buy market the second that 33.05 pops, and I'll start down 100, and I'll be up 400 in a few seconds. I'm pretty sure I took this exact trade. I'll check later, but let's watch this. Okay, so now we have aggressive buy. This level is confirmed to me, 100% confirmed to me. So now we're seeing more trades on the bid, more trades on the ask, sorry. We're getting a little push up. Let's see, we might see sellers now. A little push up, a little push up. Sellers aren't coming much on the tape yet, on the level 2. SPY still pushing down, SPY is making new lows. This is the point where I'd be looking to get in right now, right about now. It pops up. Pops up again. But you see how the volume when it pushes up is really small. We're not getting big volume. We're not getting that type of spike. We're getting a push down again. We're watching that 33.05, 3300 break. And this is where I'd be in. This is exactly where I'd be looking to get in. We see sellers picking up around 3300. I do not know what this candle is doing. That is weird. But you see, that is so weird. Let's go back 30 seconds and watch that area again. Yeah, a lot of people get shaken out by this type of wick. A lot of people get shaken out by that type of wick over and over. And that's what you don't want to get shaken out by. Just hold. Like sometimes it's just better to hold unless you're sure that you're wrong, but don't wait till it hurts, that type of thing. Don't wait till you're sure you're wrong. But when you're in a clean downtrend, before you get shaken out by a single candle, think about everything else going on. SPY selling off, QQQ selling off, VIX going up. Amazon already had one short day and is now looking for continuation short on the 1 hour chart. On the 5 minute, you have a clean rejection, you're coming down to the low. And then take that into context with the tape. It comes down to everything put together. It's not just a single thing that should shake you out. Let's see, I'm pretty sure, I don't know what the tape did at this point, but we're getting that push down to 33.05. But 3300 break is the big level that we're watching for. 33.05 is more where you know that if it breaks, you're likely to get a 3300 break. So yeah, this is where I'm looking to get short again. We see a little bit of sell pressure. You see how the candle speeds up, like even on demand, and the tape starts speeding up? This is literally how it looks in real if your Thinkorswim doesn't lag. And this gave me 20% in like seconds. This candle sell off. Now my next entry here is I'm looking to get back in below 32.75. So we're seeing that we still have size at 32.75. We have a 6 at 32.75. That's what I'm looking for the break of. So let's see if we get it. So now we're seeing a little more selling. The 4 at 3,300. That's the retest of this level, like Emiliano was talking about. We're going to get a retest of this level. This is what now we're watching the retest of the 3,300, 3,305 area. As long as it holds below here, it's perfect for another short below the lower as it pushes the low. Let's see. See if we can find some sellers. So the volume is still small on the buying pressure compared to that huge sell-off candle. Let's see. We're getting a little bit of size on the ask, not much still. If we don't get the 3280 break soon, I'm just going to turn this off and I'll answer what helps with consistency, and then I think we're going to be done. Okay, so let's see. So we're still getting the retest. Like this retest, how it's not popping really harder, it's not breaking. This is what gives me confirmation that it's likely to go down well when it breaks 3280. So it's all based on your plan, but some people will short over here. I won't, but some people would short as this touches this level again, looking for a continuation. And now what I'm seeing also on price action terms, what I'm seeing also is I'm seeing a sort of flag forming up here. I can't draw that properly because I can't zoom in, it's not letting me, but we're getting a sort of flag forming that likely will break to the downside. Kind of like a burr flag, a continuation pattern. Let's see, so now we're starting to get a little bit of a push down. Oh, I think this is the trade that faked me out, but I held and it paid off eventually. Let's see. So I think I shorted this below 32.90. Yeah, I'm 90% sure I took this trade. I shorted below 32.90 as it came back down. I'm pretty sure this is the trade. So what we see here is I don't like the price action too much of how it's pushing a lot, but the volume is straight falling. This is just a dead cat bounce. That's what it's called. So you're just getting a push up in price with a push down in push down in volume. So this is just classic fake out. If you try to buy the bottom and get a push up, you're not going to get a strong push. Let's see where the break happens. So we're still not getting a break. So what we're seeing right now is SPY is attempting to go higher, but this is just SPY screaming, I'm going to go short again. You get 3 wicks going up, you're likely to get a continuation short, very likely to get a continuation short between 344.5. So now the tape starts picking up speed. We're seeing a lot of orders. I missed it, but if you saw, it was hot right here. So I got short right here. This is exactly where I got short because I saw the bids getting hit. So I was expecting it to continue short and break 3280, but that did not exactly happen. So I was up about like 5-6% by the time we reached about here. But we struggled to hold under 32.90, and then we close above 32.90 on this candle. I'm pretty sure that's what happens. So yeah, so let's see. This candle now has 9 seconds. It's 30 seconds left. Sorry. So I'm pretty sure we get a close above. Yeah. So I was down about 5-6%. And what happens is, even though this fakes out, my regular strategies, I would definitely be out. Like there was no point in holding this. I should be out by the time I see it up here for a 2-3% loss. But I actually held this one, and eventually I'm just going to fast forward because I think I need to wrap it up. But if we go 2 minutes later, let's see, I think it's 2 minutes. Yes, this is what happened. So this is what I was expecting to happen. And what happened is we got that fake out on this candle. I added to my position once more, and then I held through a low of day break. And I'm sure we can actually just watch the tape on this candle, 953 candle. Let's watch this one. Okay, so yeah, we'll watch this one. So we're starting to get a little bit of a push. I added short right about here. this, most of my short ads were based on price action of SPY. SPY's going to new lows. So I watched that and I added short. I think I was in like 2 contracts or something. So we're getting a push down here. No, the tape's lagging. Okay, so there is size at this point. That confirms that the pop here is going to be good. And that also confirms that there will be a little bit of a bounce around low of day. That I'm expecting it to bounce, maybe like hit and move a little bit like this and then break low of day. So now we start pushing. We break low of day. Now 3270 is where it has to break. If it doesn't break 3270, I'm out for a small gain. Okay, there goes 3270. So now what we see is we get a rip down. And if this was actually working, this would be hot red by now. Like this will turn fully red, and you'll see that you're getting the bridge printed on. But right now, for some reason, it's not working. Oh, there we go. So you'll see that there will be a little bit of green orders just for every buyer, there's a seller, but you'll see that there's more and more people shorting, and you'll get a point where this will turn mostly red as the sell-off continues. If you're not in by now, you should be adding now because of this wick. This tells you that you're likely to get a good sell-off. The point where I was looking to take off is near 3260 if it pushes down. So we struggle at 3270 a lot more. And I'm fine with that because I saw size on the tape, but I'm still expecting this to come down. SPY is selling off, QQQ is selling off, VIX is going up. There's no reason this isn't going to hit 3260. So I held this one for a little bit. And it's very easy to get shaken out on Amazon because your contracts will be going up and down like crazy in price. So you just have to know what you're watching for. We're getting a pop-up again. But what happens is in the end, I think we chop around and then we get a nice break of low of day and a sell-off. So I'm going to wrap it up there. I think I'll answer the question. Nice pin bar for SPY. Do you ever take a trade if the market isn't falling? Actually, the bulk of trades that you take, even if the market, most days SPY isn't either crazy rallying or crazy thing. Most days SPY is moving slowly. So for example, Tesla runs rarely happen when the market is going crazy at the same time. They happen on their own time. So I'll be careful if SPY is selling off, but if SPY is just holding or moving up slowly, I'll happily take a trade long. But I rarely take short trades without a market sell-off because naturally Amazon, Tesla, Apple, Nvidia, AMD, Netflix, all of those stocks are uptrend stocks. So unless there's a reason for me to go short, I'm not going to go short. So that's the way that I trade in general. I think that some people, I also take a lot of market sentiment trades. So for example, when we get a SPY sell-off, for example, over here, I'll short as this breaks, expecting this little push to over here, which this definitely is not an A+ setup in terms of a scalp setup, but it's an A+ setup for a market sentiment trade. SPY is selling off really hard. Amazon just double topped and rejected. So like that type of thing, you can. Scalping and day trading, scalping even more than day trading is about being able to adapt to what you see. So does anyone have any questions? You guys can turn on your mics and ask or send it in the chat either way. And then I'll answer my last thing. I'll answer the question about the, what helps with, I think it was, let me find the question. Beginners should incorporate to achieve consistency. So I'll answer that at the end. So is there any other questions or can I just answer that? Okay, yeah, we'll do that one really quick. 9-4, that's Friday, okay. Facebook, what time was it, Danny? 9:45, okay. So Facebook. Oh my God, what did I do in my chart? Okay. So it's 9, we'll start watching this from 9:44. So I'm probably not as good as reading the tape on Facebook as I am with Amazon and Tesla because I don't watch it that much, but what are you doing? Okay. Ah, perfect. Okay, so first of all, the first thing I see here is, I'll just look at the 1 hour chart. We have our support right about here. We have pre-market support right about here. And that's what I see first thing that I look. So my entry would be looking to get, okay. So yeah, so I would definitely be looking to get short at this point. I would have probably taken this short here, first time seeing SPY sell off, but yeah, I think you could take a good trade off the pre-market low. So I think we should, you entered at 9:45. I just want to see how, okay. So I think we'll go back. Actually, no, we'll just watch it from now. Okay. So first of all, I'd be a little more careful with entering because of that wick, but I always do think re-entries do make good plays. Why is the tape not showing up? Okay. So let's see. Oh, wait. That was really important. I just missed that. Did anyone but me see what I'm going back for? I'll answer that question in a second. Before I go back, can anyone tell me if they saw something significant here? Well, now it's here, but this is basically why I went back. 284.85, we have a buyer of 25, which all that tells me is that when we get this break above here, if this area breaks, we're going to get a huge move downwards. We're going to get a nice move at least to this level, or at least a push, a pop down. And I would be out by 284. I wouldn't look to hold longer than 284. I'd be looking for a re-add below 284. So we have that size, 284.75. Let's see if something, the tape's time and sales isn't loading again. So now we pop that area. Wait. Okay. 284.80, same point, around the same price point, you get 1,000, which is not that big, but it's still much bigger than what you see for the bulk of these trades. That's the only block order I see. This is not a single person. And when you see 1,000 on time and sales, that's 1,000 times 100 on size. So because each of these, this is, I'm pretty sure that 10 shares is 100. I'm not 100% sure what I have it set to, but this is pretty big size either way. So let's play this. Let's see. So far I'm not seeing anything much. We have a little bit of size on the ask, pushing the price down. We get larger prints here, which means that this level that is the key level that's being broken, we're getting sellers holding it down. This is the retest on the tape. You're seeing a tape retest. You're seeing the ask holding. At the same time, you're seeing a little buying pressure below. So that tells me that this area might not be 100% a clean move down, but it's telling me that there is definitely sell pressure, so it's worth holding. Let's see. We just got a 5 on the tape on the right side on the ask. Still seeing a little bit of size. SPY selling off. Okay. We're getting a lot of prints. Okay, there was just a 10 and a 4 and a 3 over here. What this is just telling me is that as the price is pushing back up, people are adding once more. That's telling me that this is confirmation. There's no reason to be fully out of this yet. If it breaks above the high of that previous candle, well, that wick was weird, but I'm saying if it breaks and holds above the high of that candle, I would be at. Now, this is where I would look to add. If I was in a position already, I'm looking to add. This is like golden re-entry add point perspective at this point. You're getting a lot of buying on the left side, but it's just getting pushed right through. It's getting poured through. The only reason why I would use the tape to get out of a trade seeing buying pressure is if there's a huge block order at a certain price point, which there's nothing yet. We're getting the whole tape speeding up a lot, which is why the volume picks up. A lot of selling on the right side. You get 2s, 4s, 3s. And now I'm now looking for my chance to get out as a retest 284 again. This is 940. Well, if you held, that's good. But what I'm doing is I'd be looking to get out once more, get out at 284, and I'll look for a re-entry below 284. Because as you can see, it's testing multiple times in this candle, that 284 price point. So now I'm looking for a re-entry below this key level. I would definitely be out by now because I don't like the way 284 held on the candle, and we do have a key level. So I'd rather not just, at this point, I wasn't sure. You don't know 100% this is a full SPY sell-off yet. So this is just regular SPY movement at this point. We're not seeing anything insane, just a little bit of volume. So now let's see. We'll look to add below 284. Let's see what the tape tells us on 284. There was a 5 here, but what we see here is, again, aggressive selling around this price point. All over here, what you're seeing is aggressive selling. There was a lot of 5s and 4s here, but they disappeared. So 284 is definitely a good point for re-entry. We get aggressive buyers on the bottom. We're seeing a lot of bids being held, which means that as this breaks, we'll get a good entry to the downside. Let's see. Price action-wise, this just printed all on the bid for a second, more on the bid. What we're seeing here is it's failing to move higher. You're seeing it try to move higher, tried to bounce, it failed. We get that break. Let's see, we got that break. Now we get in short again. This is where I'd look to be short again. Tape starts speeding up a little bit. I can't tell speed 100% from this. Tape starts speeding up again. And we're getting another sell off. And now SPY's going for low of day. QQQ is just going crazy down. And this is the next sell off. We're getting huge size on the bid over and over, but it's not bouncing. You're not getting a bounce. If you got a bounce, you look to get out. But if the bid shows huge size and it's not bouncing, you don't get out. It's bouncing a little bit now. Let's see, if it bounces and it holds multiple times, I'm out, but it's still holding below 284. We're still getting a hold below 284. You can add once more below 283.2. Do you guys think if I do this live and record this and post it, that would also be helpful instead of just doing it in hindsight on thing? I can't talk while trading, but like I guess I can record it. So yeah, we're getting a pop towards 283.50. Let's see. 283.15. Yes, we're getting aggressive buying pressure. We're getting this wick. I still don't see a reason to be 100% on. Now I'm just looking for SPY to start bouncing. I'm looking for that first green on SPY to show up. 345. We're hitting 345. We broke 345. Still pushing down. There's no reason to get out here. We're still getting. Now we're at 282. Let's see if there's any size at 282. Yeah. Yeah. This is. I'm out. I'm out by now. This is 100%. You should be out. SPY's pushing up. Your 4 boys down. SPY's pushing up. This is touching 282. Your re-entry would be below 282 once more, but at this point it's a little bit extended. I would want a little bit more of a consolidation. 282 is holding. Let me see if the tape shows anything about 282. So yes, you're getting size of 10 at 282 on tape. Size, you're getting a lot of prints that are higher up, moving up. It's pushing out. It looks like it's going to break again. Let's see if it does. I don't know if it does. So no, we get a pop. This is why you don't want to buy too soon. You want to make sure. That's why I stop anticipating that much and wait for it to break and just use buy market. Yeah, I'll try to record if my computer doesn't crash. I'm going to try. Yeah, so at this point, yeah, I just wait for the 282 break. You get a re-entry. But what happens is, I just want to talk about this part of the graph chart a little more. So yes, you do get faked out, but what I notice here is this seems like a decent entry, but also we are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles almost going straight down at this point. So yeah, it looks good, and I think if you executed or you had a platform that will let you execute fast enough, you could be out at this point. You could play the 285 break and be out, but your next break should be the 284 break to get short. So I think something that's underrated by a lot in trading is whole numbers. If you just play whole numbers, you play the 284 break, you play the 284 break, you get a nice push down to around 283. 283 is right about here, and then you add at the 283 break as the candles follow, you get good moves. So I think a lot of you, if you're newer, should start using whole numbers. So now I'm going to stop sharing this screen. I'm going to try to share a Google document. And does anyone have questions about consistency, what risk management, any of that stuff before I wrap this up? Just write in the chat or say it out loud. I'm fine either way. Anybody? No problem. Okay. So who had that question from earlier? What was the question from earlier? Something about consistency. And whoever wrote it, just rewrite it again or something. I'll share this. Okay. Can you guys see my screen? Question, you can answer that. And what are some things beginners should incorporate? Okay. Number one, I'm dead serious about this. If you're scalping, don't use Thinkorswim. Just don't. Because the key in scalping is keeping your losers small. And what happens on Thinkorswim is you can't sell fast enough to get out. So don't use Thinkorswim. And that leads to the second point. Keep your losers small. And the way you do this is, number one, watch SPY, watch the tape, and don't hope for the trade to work eventually. Even if it works eventually, you'd rather be out with I would say by keep your losers small, I literally mean 3 to 5%. Nothing bigger than that. Even if it spikes, you normally, other than on spikes, this is possible. If you get spiked out, then it's different, but you should be keeping your losers 3 to 5%. That's the first big thing. Number 2, stick to a single style. Don't try to swing, day trade, and scalp at the same time. Choose one and focus on that. So next, let's see. So wait, can you guys see my screen? Can someone just write in chat? Yeah, okay, good. Okay, so stick to a single style. Next, I would say is sizing. So there's a few things here. Trade what you can lose, number 1. Number 2, I would say size. Start with half your regular size. Build a cushion, then size up. So for example, if you looked at, I think we'll go off on demand, but I can't share my others. Can you guys see the Thinkorswim, or you can only see the Google document? Can someone tell me if you can see Thinkorswim? Yes, okay, perfect. Okay, so we'll go to the account statement, we'll look at trade history. So we'll go to show 7 days back. Why is it not letting me? Whatever, it's not letting me. I do not know why, but okay. Yeah. Whatever. Okay, I'll just go back to the Google document. Okay. So what this means is you start with, yeah, I'm moving to IB also. So start with small size. Start with, let's say that you're new and your average size on a scalp is 1,000. Start with 500 on your first 2 trades. Oh yeah, Thinkorswim on Friday cost me left at least $5,000 for me on the table, because what happened is I would watch a trade happen, I would get in short, and I would get ready to sell, but active trader would lag behind. So I bought a contract at 40 and I could sell it at 43, but the true price at that time was 47 or 48. And this happened about 10 times in a row when I was scalping Amazon to the downside. Like, I'm not even joking, 10 times in a row. It was so frustrating, but whatever. So next thing is sizing. Start by building a cushion, and then from there continue. Don't start by trying to take your regular size. And also, if you trade the open like the first 5 minutes, trade smaller. Next thing, I'd say 100% review and journal. If anyone has trades they need me to break down, just send it to me. I normally will reply. Review and journal. Let's see what else. I think the biggest thing that's important is stick to a single style and look at how to improve. So psychology. I'm not going to go into this, but first thing is control your emotions. Second is group psychology, which basically just means try to sell when everyone else is buying. And this is super underrated. For example, if you try to get short when everyone is getting short, you get a crappy fill, first of all. And number 2, you're likely to get smaller profit, bigger loss. But if you get short, let's say you get short on, we'll go to Amazon. You get short, let's say, most people are looking to get short, let's say below here. They're looking to buy in as they see confirmation holds. If you mark it in, or you try to buy the ask here, I guarantee you'll get like 3%, and then you'll get spiked out for a 20% loss up there. Instead, what you do is you get over the fear of being wrong, and instead you execute. As soon as you see this tail and you see this pushing back, you just execute. I guarantee you will get a 10-15% spike, and you can be out here. This is what I did multiple times in a row. Same thing. You get short here. Everyone else is looking to get short here. Everyone else gets faked out by this wick. You get out 10-15% green over here. Try to be ahead of yourself. Like, I'm not saying guess and anticipate, but I'm saying know what you're looking for and don't wait too long. There will never be a chance where you will be able to say, I have all the confirmation I need to take a trade. You cannot wait for that moment. You have to execute quickly. And I think that's something that no one told me. I always heard over and over, wait for confirmation, wait for volume to confirm, wait for this to confirm, wait for that to confirm. I think it's much better to just get long, get short. And if volume or tape doesn't add up, take a small loss instead of chasing it down once everyone else is also agreeing and trying to get in. Does that answer your guys' question? Does anyone have any other questions about any of this stuff over here? If not, I'm going to wrap it up. So, okay, so I guess that's it for today. I hope you guys enjoyed. Emiliano asked me to wrap it up because he had to leave, so that's it. So I hope it helped you guys. If anyone has any questions or they want a specific topic covered for next time, let me know. If not, that's it for this time. Also, do you guys know, can everyone just answer this question in the chat if you're listening? Does Saturday or Sunday work better for most people? Okay. So I'm gonna send out the way I planned for Amazon. I'm gonna send something out like that to everyone probably tonight or tomorrow. Ish, because tomorrow's Labor Day, market's closed for Tuesday. If there's a specific stock that's not one of the big ones that someone wants me to cover, just DM it to me or write it right now because I do my plans over the weekend, Sunday and Monday. Monday this week, I guess so. Okay, so that's it for now, guys. I hope you enjoyed. So till next time. Bye.